Good morning, everybody. Paul here, coming at you with a Crypto Coffee update, which includes all the news, the events, the conferences, everything you would like to see to keep you up to date in this exciting space that we call crypto. And of course, I have my coffee for a simultaneous sip, which, as you may know by now, includes a simultaneous sip, very self-evident, of coffee, tea, water, what have you, to get the day started off right together in solidarity. And look, I got little guinea pigs on my mug today. They're my favorite little animal. They're so cute, little friends. Cheers. Good stuff. All right, so you can see here we have Cryptide.cc open before us, our lovely website, and keep an eye on this, guys. In the next few weeks to a month, we're going to have some fantastic tools on the agenda for you all that you can sink your teeth into, and it's going to be something that I think can really help you every time you interact with the crypto space. So keep an eye out for that formal announcement. Now, the meat of the matter, we're talking about the Galaxy S10 again today. If you remember in the last episode, we discussed how the new Samsung device will include a portion of the phone that is reasonably secure for most users, and this will allow individuals to interact with blockchain technology using their new S10 Samsung device. Cool stuff. However, the main point that I wanted to highlight is that Engine Coin was included in the display that Samsung released and demonstrated that it will indeed be included in the consortium of projects that are supported. This entails that ERC 1155 will be supported as well, which is in addition to ERC 20 and ERC 721. To popular implementations. ERC20 is the kind of staple Ethereum token protocol. It's something that can be likened to a fungible asset. So think, for example, one substratum token is one substratum token is one substratum token. And for ERC 721, this pertains to non-fungible assets. So think crypto kitties. Every kitty is different and has various characteristics that, when combined, result in a new non-fungible unique kitty. So that is the difference between ERC 20 and ERC 721. Now, for something like a video game item, for instance, in which you have both fungible and non-fungible elements, you need a new token protocol to help to avoid the costly action of having to update a contract consistently. Anyone who's interacted with the Ethereum network knows how difficult it can be to have to consistently send transactions over the network. The fees are very volatile, and ultimately the costs can be prohibitive. So what the Engine Coin team has done is they have created a new contract protocol known as ERC 1155, as you can see here. And here on Medium is a fantastic write-up by one of the Engine Coin team members talking about how it is a contract explicitly geared towards being a crypto item standard. Really great stuff. Been keeping an eye on this project for a long while now, considering that they've been working on this contract implementation for the better part of a year, since the 2017 bull run. So this kind of flies in the face of individuals, and I don't think there are too many of them out there, but I've heard it said that fundamental analysis is just kind of comparing apples to oranges and no one really knows what they're doing, and I don't think that could be further from the truth. Watching this space grow up into a legitimate industry of its own right has clearly, at least in my eyes, demonstrated that there are teams out there who are doing extremely good quality work, working hard in both boom and bust cycles of the crypto market, trying to improve and build upon the technology that has grown underneath their feet, and they're trying to raise it up to new heights. So the fundamental element of this kind of stuff definitely has bearing. Just to give you an idea of the kind of disparate moves we see in the crypto markets, here you can see where Engine Coin was situated at about 4 cents per share, we can say, and then it just skyrocketed to about, at its height, about 10 cents. Now we're seeing a bit of retracement. So more than doubling in terms of price. Almost 150% in one day. And this just goes to show, again, that if you're patient and willing to watch these kind of projects, if you're willing to do the due diligence and ensure, hey, this is a team, they're working hard, they're making something that has a huge level of applicability for a specific niche application in this ecosystem, well, you may just be looking at a project that has a promising future. And of course, that entails an indeterminate length of time. But I say all this to say, always do your own research, and don't let somebody's naysaying ultimately dissuade you from making a decision that you believe on your behalf is the best decision for you, myself included. There are projects I like and don't like, but that doesn't mean I'm objectively correct. This is just one man's opinion. So definitely, as we say here at Cryptide, do your own research and come to your own conclusions. You'll be much more satisfied with the outcome if you do. So let's move on to the happenings all around the world. Singapore has an accelerator called Tribe. Not a tribe called Quest, but a tribe called Singapore. That was a really bad joke. So their accelerator program tribe is partnering with Consensus, which is a Ethereum-based entity that seeks to, kind of in their own right, accelerate Ethereum projects in the Ethereum ecosystem to help to get these projects started off right and fund them in a way that can kind of speed up their development for the benefit of the entire ecosystem. Now, we've mentioned Singapore previously. They recently stopped one of their security tokens offerings due to some regulatory complications. However, this definitely doesn't disqualify Singapore as a forward-thinking financial technology hub. You can see their accelerator has been around for a short while now, and a partnership with Consensus, in my eyes at least, kind of suggests that they were looking at the Ethereum ecosystem as one of the main points of development that they would want to accelerate projects in. And that makes sense. Ethereum is a huge ecosystem in and of themselves, so that would be something they would want to focus on. So to see them bringing in Consensus and agreeing to a mutually beneficial partnership kind of lends some credulity to that point. Just something interesting that we can keep an eye on going forward. The tiny little island nation of Singapore is really just packs I said before, wallop of a punch in terms of its weight class. It's a tiny little nation with a lot of technological innovation and something definitely worth keeping an eye on in the future. Next up, we got Eric Voorhees. This individual is a really intelligent anarchist, likes to have a lot of fun as well, really down-to-earth guy. And he pointed out recently that in California, they're trying to pass a bit license-esque kind of law. What is a bit license? A bit license is a piece of legislation that says explicitly what parameters a crypto project needs to have in order to be allowed to participate in the economy at all, essentially. New York is one of the best examples of this. Recently, LibertyX was granted the legal right and awarded a bit license, meaning they can open up their crypto ATMs all across New York City. So while prohibitive, definitely shrinks the pool of candidates that are legitimately able to compete in this way. While this may dissuade some scams, it is very difficult and, of course, makes it very prohibitive in terms of smaller startups breaking into the space, considering the cost associated with regulatory compliance and ensuring that you have this bit license to operate. Here is the letter of the law, or at least the proposed law that was introduced to the Assembly member, or by Assembly member Calderon. It was introduced in the California Legislative Council. I'm not going to read the entire thing. As said, it's easily conceptualized as a bit license kind of act, which means that you would have to have regulatory approval to open up a cryptocurrency-based business. And California really hasn't been friendly to business for a long time, probably since the Reagan years, essentially. Their ethos has largely become, if it moves, tax it. If not, tax it to death. And that is something that can be beneficial. I mean, governments have to raise revenue. However, the Laffer curve or Laffer curve is a thing for a reason. You have a growth maximizing point, a revenue maximizing point in terms of where your taxation level is. And ultimately, if you're taxing somebody at 90%, then they're going to be more dissuaded from engaging in that activity when compared to an activity in which they'd be taxed at 50%. Since ultimately they are not weighing that point of taxation, they're ultimately weighing the amount of net income that they are able to take in. And especially in terms of fiduciary responsibility, if you start engaging in business practices that ultimately see your bottom line decrease despite gross profits increasing, then you get into some choppy kind of dicey waters in terms of shareholder preference, etc. So what this means is that this could bode well for taxation in the short term, but potentially could be a major detriment for innovation in the state that hosts Silicon Valley, of all things. So seeing that dichotomy of Silicon Valley and huge amounts of tech giants rising up out of California and seemingly unfavorable legislation beginning to work its way through the legislative chambers of California, one has to wonder what this new wave of digital innovation, such as cryptocurrency, will have on the prohibitive ecosystem that California is setting up. Will these crypto projects relocate? Will they move to, let's say, Nevada or Arizona, right across the border? Or ultimately, being a global phenomenon, will they seek out a different legislative area, maybe somewhere like Malta, to set up shop? Really no clear answer. Really, it's up to, again, a matter of preference. While 90% may be too much for some, maybe some individual companies or individual entities are making so much capital, they don't personally mind it. Bill Gates himself said he would mind a higher tax rate, for instance. So again, it's a very much a matter of subjective preference there, but I think the ultimate takeaway is more individuals proportionally will dislike this practice due to the associated increase in costs. So neat stuff going on there. And talking about prohibitive actions, a Bitcoin mom, as she calls herself, she lost her bank account for investing in the cannabis industry, something that's completely legal, completely above board, but it gets into a weird kind of federal gray area, right? So they lost their business bank account because, despite being accredited investors, they have fantastic credit ratings. Cannabis here in the United States is very much still a Schedule 1 drug. So if you are caught with a baggie of marijuana, it's very similar to being caught with a baggie of heroin or methamphetamines. And this may sound absolutely insane to folks who aren't from the US, and trust me, it sounds absolutely insane to folks who are in the US. This is a leftover piece of legislation from the cannabis prohibition era that started back when DuPont wanted to support their plastics industry and in turn use protectionist type of legislative tactics to pass a ban on marijuana and cannabis as a whole, which previously used to be a major crop of most Western nations, since it's so easy to grow for industrial things such as rope, hemp, etc., hemp rope, all that good stuff. But now, fast forward to modern times, it's a Schedule 1 drug. And so we're in a weird place where you can invest in pot stocks in, let's say, Colorado, in which it's completely legal on a state level, but because your bank is FDIC insured through the federal government and has federal ties, then your bank ultimately doesn't want to usurp the risk of facilitating such a transaction. So it's kind of like a duality of thinking in which you can have your cake and eat it too, but also you don't have any cake and you can't eat it either. So really strange stuff, and very, very just a great example of how much overhaul is needed in terms of legislation. And I think it definitely it serves as a good example as well as some of the issues we see here in the crypto space. After all, we're dealing with huge amounts of technical and financial innovation in ways that which the world has never seen, meaning that there's no precedent or legislation that fits perfectly into the paradigm we're building here. What that means is we have to kind of fit it in and shoehorn it into existing legislation, and some parts may be applicable, some parts may not, and it leads to weird discrepancies. And this is perhaps one of the weirdest discrepancies that we're seeing in the emerging just mushrooming out of technology and innovation. And as laws and culture change, ultimately laws need to change with the culture. So it's very interesting to see. And not surprisingly, people are asking, hey, do you accept Bitcoin? They do accept Bitcoin, but not too many people use it for the time being, assumingly because of technological limitations of their user base, since it's still a new thing. And after all, there are high fees comparatively. Something like Smart Cash may be great for this individual. I've been working with them, doing some videos for them, and really they're just leaps and bounds above the competition in terms of low cost fees for instant payment settlement. So very specific use case, of course, but nonetheless very relevant as well. So perhaps ATMs can quickly convert cash into Bitcoin would do the trick, maybe some software platform like Abra. So good thinking by the author here. Now you can see here this is not just a one and done problem, since Bitcoin transactions have surpassed PayPal in terms of volume. So it's not just this one individual who's saying, hey, I'm having trouble with PayPal or traditional payment means. Bitcoin transactions are huge now, and individuals all around the world wish to use this technology to get around some of the prohibitive mechanisms that are in place for just traditional businesses. You can see here we have Visa, Union Pay, and MasterCard all the way up here at $10 trillion. And down here we have PayPal, and now Bitcoin has kind of ebbed up past PayPal to 1.3 trillion. So really cool stuff there. Really exciting. Again, this is just year-over-year measurement. And interestingly enough, this does account for assumingly some measure of wash trading. So if we were to see the actual Bitcoin figure, and I know I'm going to commit some crypto heresy here, it might be less than PayPal. I know I hate to rain on the parade, but if we account for wash trading and fake volume, this may be less than PayPal. And that's a huge, huge deal, and something that I think very legitimately so individuals are concerned about. If I was an institutional investor, I would want to know that this volume is legit. And of course, we have liquidity indexes with which we can base assumptions about the market. But if those liquidity indexes in turn derive their information from wash trading, then there's no safe place. So because of that, I think that is the major thing that the crypto space as a whole needs to focus on. So I want to use this moment to give a shout out to CER, Crypto Exchange Ranks. They're doing fantastic work. They are a subsidiary entity of Hacken, which is a crypto project, and they are trying to do transparency hacking. Just ensure that these figures from which we gain a lot of excitement about aren't fake, that at least the mass majority of this figure would be legitimate. But as of right now, there's no way to know that. So really, I'm personally excited to see if these figures hold up to scrutiny, and when they do, man, let me tell you, when they begin to hold up to scrutiny and we can be assured of the volume, the legitimate nature of the volume, we are going to see, the gates are open and institutional investors are going to run into this thing because it essentially becomes a assured, semi-regulated, if not self-policing marketplace, which is, man, let me tell you, we are entering into a beautiful, beautiful point in the future, folks. Okay, so Ripple saved the world. Essentially, it's the best thing since sliced bread. Even Vitalik Buterin says so. Guys, it's so great. OMG, I love it. No, but this article title is hilarious. I'm thinking I'm gonna give them the benefit of the doubt. I'm pretty sure this article title was kind of a joke to get more views. And well, it's working. We're taking a look at it. But Ripple's XRP is better than Bitcoin, says Vitalik Buterin. Total sarcasm. You can see here he says institutional adoption, TM, and partnerships, capitalized TM. So Vitalik was talking smack. He was just essentially poking fun at the notion of a stable coin. The fact that one Bitcoin is something Pierre Rochard said. And Vitalik says, oh, well, the chart for XRP would look the same. It's going to look good. One XRP equal to 1 XRP, just like 1 Ethereum, always equal to 1 Ethereum. And perhaps the most important is 1 Dogecoin is always going to be equal to 1 Dogecoin. So just having a little fun here. But again, this is a good story and a good article to take a look at because it just goes to show that if this author, and just going to kind of go off on a hypothetical. We have no way to know if this is a joke or not from the author. If this was taken at face value and the author is saying, hey, this is something Vitalik said, it just goes to show why you got to read the actual article and get the context and the primary source from the information, because there's so much disinformation that moves through the crypto space that something like this, if seen at a glance, could be taken at face value, and individuals could maybe think, hey, I'm going to make this investment because this extremely intelligent individual in the space truly believes this, when in all reality it was a comment said in jest, in sarcasm. So again, just a great point and a good thing to use to drive home the idea of doing your own research, checking out those primary sources, and that's exactly what we try to do here in the Crypto Coffee updates, right? Kind of walk through with everybody, do this together, show you how I peruse the news, kind of what I do on a daily basis, very regularly, in order to not only benefit the space as a whole, but to expand my body of knowledge, help me in a lot of the roles that I fill in the space, both as an advisor, both as a chief research officer, all this kind of stuff, these different hats that I wear, and just to help you all, by extension, do the same thing, since really this is something anybody can do. It's all out there. It's all public information. We can do it. All you need is a little bit of time, a little bit of dedication, and a good bit of coffee. It's important. Yeah, I got a bonus simultaneous sip there, huh? All right, so speaking of Ripple, we're still on the Ripple train. Coinbase is indeed listing Ripple. This is not fake news. This is for sure occurring. So Coinbase is going to list Ripple, third largest cryptocurrency by market cap. Cool stuff. Everybody's happy about it. The Ripple Army's heads were just like, oh my gosh, this is awesome. And it's good. Congratulations. But I think the biggest takeaway here is something that can be implied from the listing. Previously, Coinbase said, look, we don't want to list anything that is for sure not a security. We want to make sure that if it is a security, we're not listing it, therefore we cannot be implicated in securities fraud or anything like that. That was actually the reason they gave previously, or at least alluded to, why they wouldn't be listing assets such as XRP, because they were embroiled in a lawsuit that could potentially peg them as a security. However, seeing Coinbase launching support for XRP leads me to believe that perhaps there's some information or some precedents that they've been made privy to that would let them know, hey, it doesn't seem that Ripple or XRP are going to be listed as securities, if not at any point in the near future at least. So that could be an implication to be taken from this. However, this is just speculation. We're not sure as to the internal thinkings and workings of the Coinbase team and how they decide to list these assets. They've given some guidance before, but considering that the reason given that they wouldn't be listing XRP is that it might be a security, and now they've kind of shifted their tone, it leads me to believe something occurred. What that something is, we don't know. And again, this is just one man's speculation, but I think it's a legitimate point of speculation that could be opened up as more information becomes available to we the public. So we'll keep an eye on that going forward. Neat stuff. Now, private enterprise blockchains make no sense and are set to fail, says the CEO of Abra, Bill Barhide. I'm trying to get these names as just correct as possible, since your name is your calling card. It's you, but they can be difficult. So Bill, I hope I got you there, man. I love Abra. Abra is really a fantastic platform. I don't use it personally, but from having seen demos and have heard user reviews, it seems to be a fantastic platform that people really, really love. So it's interesting to see that I don't really see eye to eye with this, and it's always good to have differences of opinion in the space. That is how we grow as individuals. We critically think about this stuff, and it's fantastic, truly. So here's a quote. People have this fallacy idea that they're going to make blockchain work inside the firewall. It's all going to fail miserably. It's all about a truly decentralized cryptocurrency and a private blockchain. It just makes no sense. So really, this individual thinks that, hey, look, enterprise systems that are permissioned, assumingly something like Hyperledger, and perhaps even semi-permissioned systems like Stellar Lumens, he doesn't like them at all. And of course, we're referring to things like JP Morgan coin. Interestingly enough, though, it doesn't seem like JP Morgan coin is a cryptocurrency proper, and while it's a blockchain, it may not be considered a blockchain in a distributed ledger format proper either. And from my opinion, that's okay. It's definitely not one size fits all. And I want to reference back to a thread we talked about in many Crypto Coffee updates ago, probably about 10 or so, last month, I believe. It was from Ari Paul. This dude is a very intelligent guy. I love his stuff. He's really articulate, great way of speaking, great air about him. And he made a fantastic point that said, where is it? Essentially, yes, I think that banking, medical, and supply chain industries will be transformed by permissioned blockchains, but not because permissioned blockchains are new nor interesting. Rather, these industries simply never implemented other types of permissioned distributed ledgers that have been around for 50 plus years. So now all the focus on blockchain is pressuring them to finally upgrade their databases that are comically obsolete. And very well said. I mean, just in 2 tweets, Ari encapsulates my line of thinking that he helped to influence, of course, on this subject. Essentially, these aren't blockchain systems as we conceptualize them proper in terms of being a distributed system. Rather, these entities are going to adopt existing types of databases and digital frameworks that have already been around for a while, but they've never bothered to upgrade to, just simply due to associated costs, and if it works, why fix it? After all, generally these kind of industry-wide upgrades happen in fits and starts, since if your competitor is upgrading, you too need to upgrade at least to a reasonable degree. And blockchain has really kind of turned on the light and shown exactly where these issues are and how they can be remedied, and is really just highlighting these discrepancies in terms of efficiency relative to what's available. So as Ari Paul says, blockchain itself may not be what drives a lot of this innovation forward, but rather the blockchain as an innovation, as an illumination mechanism that shows how, as he says, comically obsolete many of these systems are. So private blockchains, enterprise blockchains, will they fail, and do they make no sense? My personal opinion is no. Then again, I'm not the CEO of Abra. And of course, as said, having differences of opinion is what strengthens us and what allows us to get closer to the truth. So what do you think? I'm really curious on this one. Drop me a comment below, or as said, hop over to the Discord. Actually, we talked about Engine Coin over a year ago in the Discord. I talked about how I think the 1155 contract code is fantastic and actually has a lot of promise. So get in that Discord, go ahead and jump in. I know it may be a new ecosystem for a lot of you, but we share a lot of great information there, truly. And it's a fantastic place to do your own research and talk with like-minded people. We'd love to have you. Now, the final article of the day is about Argentina, where there does not seem to be a dampening in terms of innovation or crypto winter whatsoever. I just wanted to use this as a kind of capstone piece, just to highlight that you can see here, 2017 token boom, the peak was 5.7 million Argentine pesos. And one of the takeaways here is the idea that individuals in Argentina are using Bitcoin and other cryptocurrencies as a hedge against the volatility in their local fiat currency. Normally, we can see it as the other way around. You want to kind of get into a stable coin, relatively stable, in order to hedge against Bitcoin's volatility, which bebops up and down like crazy. Well, throughout 2018 and 2019, mostly down, am I right? However, in more volatile areas such as Argentina, of course in areas like Venezuela, Syria, Iran, these individuals are investing in Bitcoin as a hedge against their local currency's volatile nature and centralized forms of control. What this means is that this is a fantastic global tool for people all around the world to protect themselves and their assets, their sweat equity in a way, from these ultimately predatory financial regimes that are downgrading their purchasing power relative to their work as it was promised originally. So, you work for 10 hours and 2 years later you have 2 hours worth of capital. It's not really a good system. It doesn't really incentivize hard work, kind of like we were speaking to previously in California, right? So this is kind of like that on steroids, super volatile region, but it's very, very encouraging to see that there are now alternative options for these individuals in Argentina, and certainly if the world ends up adopting Bitcoin or at least using it in some reasonable facet for the global economy, individuals who jump in early are perhaps going to be rewarded, so maybe they kind of get their comeuppance. They have to deal with this horrible volatility in their local economy. Maybe by jumping into cryptocurrency, they kind of get an early adopter boon that kind of offsets the associated losses. So that would be really nice, kind of like a cathartic all's well that ends well kind of thing. But who's to know about the future, really? No one here has a crystal ball. The best thing we can do is just what we did today: go through information, talk about it, share it, talk about our differences in opinion, and come to a reasonable conclusion that, as I said before, allows us to get closer to the objective truth, because that's really what life is all about, guys. So with that said, I hope this information could be helpful to you. Let me know what you think of this kind of content below in the comments. And of course, all the links below in the description. Like I said, got to do your own research. Check behind your buddy Paul here and check out these primary sources. They're really important. So, all right, thanks so much for watching, guys. Much love. My name is Paul, signing off. We are Cryptide, and remember, the tide is rising, as is the Bitcoin holders proportionally in Argentina. Good for them.